Hello everyone. On to Chapter 6 of the Burglary webinar. In this chapter, we look at factors affecting burglary premiums. Burglary insurance premiums are influenced by various factors that help insurance providers assess the level of risk associated with insuring a property against theft and burglary incidents. Understanding these factors can help policyholders better understand how their premiums are calculated. Here are some key factors that can affect burglary insurance premiums. Factor number 1. Property location. The location of the insured property is a significant factor. Areas with higher crime rates or a history of burglaries are considered higher risk, which can lead to higher premiums. Conversely, properties located in safer neighborhoods or areas with lower crime rates may result in lower premiums. The location of a property plays a significant role in determining the premium amount for burglary insurance. Insurance providers consider the crime rate and the area's history of burglaries as important factors when calculating premiums. Here's how location influences the premium amount. 1. Crime rate. The crime rate in a particular area is a crucial factor in determining the premium for burglary insurance. Areas with higher crime rates, including burglaries, are associated with a higher risk of theft and burglary incidents. Insurance providers consider these higher risks when determining premiums. Therefore, properties located in areas with higher crime rates may have higher premium amounts compared to areas with lower crime rates. 2. Area's history of burglaries. Insurance providers also consider the history of burglaries in a specific area. If an area has a significant history of burglaries, it indicates a higher risk for potential policyholders. Insurance companies assess the likelihood of burglary incidents based on the area's past experiences. Higher incidents of burglaries in the area may result in higher premiums to compensate for the increased risk. 3. Neighborhood factors. Factors specific to the neighborhood can also impact the premium amount. Insurance providers may consider factors such as the presence of security measures in the neighborhood, the overall safety and security infrastructure, and the level of police presence. Neighborhoods with a strong security infrastructure and low crime rates may result in lower premiums due to the reduced risk of burglary incidents. 4. Property-specific considerations. Insurance providers also evaluate property-specific factors when assessing the premium. These factors may include the property's proximity to high-risk areas, accessibility to public spaces, and any specific vulnerabilities that may make the property more prone to burglaries. Properties located in secluded areas or areas with limited visibility may be perceived as higher risk, potentially resulting in higher premiums. It's important to note that each insurance provider may have their own methodologies and risk assessments when considering location factors for burglary insurance premiums. Policyholders should discuss these factors with their insurance provider to understand how location influences their specific premium amount. By considering the crime rate and the area's history of burglaries, insurance providers aim to accurately assess the risk associated with a property's location. This risk evaluation helps determine the appropriate premium amount, ensuring that policyholders are charged premiums that align with the potential risks in their specific location. Factor number 2. The security measures. The presence and effectiveness of security measures can impact premiums. Properties equipped with security systems, alarms, surveillance cameras, or security guards are viewed as less susceptible to burglaries, thus potentially leading to lower premiums. Insurance providers may offer premium discounts or incentives for implementing these security measures. The presence of security measures such as security systems, alarms, surveillance cameras, and security guards can play a significant role in reducing premiums for burglary insurance policies. Insurance providers often consider these security measures as risk mitigation factors, which can lead to lower premiums. Here's how the presence of security measures can potentially reduce premiums. A. Deterrence of burglary. Security systems, alarms, and surveillance cameras act as deterrents to potential burglars. The visible presence of these security measures sends a strong message that the property is protected and monitored. Insurance providers recognize that these measures reduce the likelihood of a successful burglary, thereby lowering the risk of a claim being filed. As a result, policyholders who have robust security measures in place may be eligible for premium discounts. Prompt response and mitigation. Security systems and alarms are designed to quickly detect unauthorized entry or suspicious activities. When a burglary attempt occurs, the alarm systems can trigger immediate responses, such as alerting the authorities or security personnel. This prompt response can significantly minimize the potential damage and losses. Insurance providers value these proactive measures as they help mitigate the severity of a burglary incident, leading to potentially lower premiums. B. Enhanced surveillance. Surveillance cameras provide visual evidence of any criminal activity, aiding in identifying the perpetrators and potentially recovering stolen items. Insurance providers acknowledge the value of surveillance cameras in investigating burglary incidents and increasing the chances of recovering stolen property. The presence of surveillance cameras can indicate a higher level of security and can contribute to premium reductions. C. Security guard services. Employing security guards can further enhance the security of a property. Security guards can deter criminals, monitor activities, and respond swiftly in the event of a security breach. Insurance providers may view the presence of security guards as an added layer of protection, leading to potential premium discounts. It's important to note that the specific impact of security measures on premiums can vary depending on the insurance provider and policy. Policyholders should discuss security measures with their insurance provider to understand the potential premium discounts or incentives available. Policyholders may be required to provide documentation or proof of their security measures to the insurance provider. This can include information about the types of security systems, certification, or maintenance records, and any other relevant details that demonstrate the effectiveness of the security measures. By investing in security systems, alarms, surveillance cameras, and security guards, policyholders can not only enhance the protection of their property but also potentially reduce their burglary insurance premiums. These measures not only provide peace of mind but also offer a financial benefit by minimizing the risks associated with theft and burglary incidents. Factor number 3. The property value. The value of the insured property and its contents are considered when determining premiums. Higher value properties may have higher premiums due to the potential for greater losses in the event of a burglary. Policyholders should ensure that the coverage limits adequately reflect the value of their property to avoid being underinsured. Factor number 4. Deductible amount. The chosen deductible amount can affect premiums. Higher deductibles generally result in lower premiums, as policyholders are assuming a greater portion of the risk. However, it's important to strike a balance between a deductible that is affordable in the event of a loss and a deductible that does not significantly increase the financial burden. Factor number 5. Claim history. The policyholder's claim history, including previous burglary claims, is considered by insurance providers. A history of previous claims, particularly related to theft or burglaries, may indicate a higher risk of future incidents, potentially resulting in higher premiums. A policyholder's claim history, particularly related to previous burglary claims, can indeed have an impact on burglary insurance premiums. Insurance providers take into account a policyholder's claim history to assess their level of risk and determine the appropriate premium amount. Here's how claim history, including previous burglary claims, may impact premiums. Increased risk perception. A history of previous burglary claims can signal an increased risk of future burglary incidents. Insurance providers consider this claim history as an indicator of the policyholder's vulnerability to burglaries. Multiple previous claims or a high frequency of claims related to theft or burglaries may be viewed as an indication of higher risk exposure. As a result, insurance providers may adjust premiums accordingly to reflect the increased risk perception. Higher likelihood of future claims. Insurance providers analyze claim histories to assess the probability of future claims. Policyholders with a history of previous burglary claims are perceived as more likely to file future claims related to theft or burglaries. This higher likelihood of future claims is factored into the premium calculation, potentially resulting in higher premiums to account for the increased risk exposure. Individual claim severity. The severity and financial impact of previous burglary claims may also influence premiums. Insurance providers consider the value of the losses incurred in previous claims. Higher value claims may lead to higher premiums as they suggest a potential for greater financial exposure for the insurance provider in the event of future claims. Risk evaluation and underwriting guidelines. Insurance providers have underwriting guidelines that consider various factors, including claim history, to assess the overall risk associated with insuring a policyholder. These guidelines help determine the premium amounts. A policyholder's claim history, including previous burglary claims, may be a specific factor considered during the underwriting process, potentially resulting in premium adjustments based on the level of risk perceived. It's important to note that each insurance provider may have its own approach and criteria when evaluating claim histories for premium calculations. Policyholders should review their policy documents and discuss their claim history with their insurance provider to understand how previous burglary claims may impact their specific premium amount. By considering the claim history, insurance providers aim to accurately assess the level of risk associated with insuring a policyholder. This risk evaluation helps determine appropriate premium amounts, ensuring a fair and balanced approach in reflecting the policyholder's risk exposure based on their past claim experiences. Factor number 7. Business interruption coverage. If the policy includes coverage for business interruption, the nature and scale of the business can affect premiums. Factors such as the type of industry, revenue, and operational vulnerabilities may be considered when determining the premium for business interruption coverage. Factor number 8. Policy coverage and limits. The extent of coverage and coverage limits chosen by the policyholder can impact premiums. Higher coverage limits or additional coverage options may result in higher premiums. It's important to note that each insurance provider may have its own methodology and criteria when assessing these factors for premium calculations. Policyholders should discuss these factors with their insurance provider to understand how they specifically impact their premium amount. By considering these factors, insurance providers aim to accurately evaluate the risk associated with insuring a property against burglary incidents. This risk assessment helps determine the appropriate premium amount, reflecting the policyholder's risk exposure and the potential financial impact of burglary-related losses. It is important to note that each insurance provider may have its own methodology and criteria when assessing these factors for premium calculations. Policyholders should discuss these factors with their insurance provider to understand how they specifically influence their premium amount. By considering these factors, insurance providers aim to accurately evaluate the level of risk associated with insuring a property against burglary incidents. This risk assessment helps determine the appropriate premium amount, reflecting the policyholder's risk exposure and the potential financial impact of burglary-related losses. This is where we bring Chapter 6 to a close. We take a break and will be back with Chapter 7 discussing claims procedures and documentation. See you again shortly.